Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 6th of May, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of May. And as we look across these three majors, the Euro is still operating in a narrow range, centered around the 110 round figure, whereas the pound, the cable, has been turning bullish towards the end of the week, and as well as the Aussie dollar, especially with the RBA unexpectedly raising rates. They have paused for the last couple of months. They have unexpected increased rates this round, and that has turned the Aussie dollar bullish and recovering from its recent lows. And even though the non-farm payroll report was stronger than expected, that in fact caused a concern that the Fed may be pressured to increase rate one more time after they already raised rates on Wednesday by an expected 25 basis points. And the market was hoping for a pause after that, which was not stated explicitly. And further hopes of a weaker job market was fading as the non-farm payroll report came out very strong, again unexpectedly. So let's review what happened last week with the three central banks, with the RBA, ECB, and the Federal Reserve, all raising rates last week, and also take a look ahead to next week with further CPI inflation data from the US. Well, looking back at last week, it was a tale of central banks rate decisions, with the RBA, Federal Reserve, and the ECB all raising rates by quarter percent, 25 basis points, with the RBA making a surprise increase where they were not expected to. They did make the pause for the last couple of months, but they finally now made their 10th rate hike since May of last year, as well as the Federal Reserve, also a 10th rate hike since March of last year, while the ECB made their 7th rate hike since July of last year. And the market was expecting the Federal Reserve to hint at a possible pause, but it was not stated, and the Fed Chair Powell did highlight that they will need to take a look at the data month by month and will evaluate that for the next meeting in mid-June. So next key data will be US CPI, plus there's going to be another month of NFP data at the beginning of June, which on Friday, which data was stronger than expected, strong 253,000 jobs added. And more worrying is also the average hourly earnings increased by 0.5% versus an expected 0.3% increase. So this is indicating a very hot jobs market, and this will be a concern for the Fed that could drive inflation higher again, which we'll see next week next Wednesday, where these are the forecast numbers, and they're hoping that it dips below 5% for the year. So this will be a very critical one on the Wednesday. And on Thursday, the Bank of England's turn to raise interest rates. They're expected to also increase by 25 basis points. And following that, the GDP figure on the Friday, where it's still going to be a zero growth, hoping it doesn't dip into the negative territory. So after some significant rate decisions from the central banks, next week we're going to focus back onto inflation from the US and follow up with a couple of UK news for next week, with especially the Bank of England rate decisions. All right, let's move back to major pairs analysis. All right, let's begin with the euro, where it's still having difficulty breaking above this previous swing high, and it has already tested it 4 times now, and has always pulled back lower, back to 110 area. So let's move this trend line to this area now. And resistance is still strong at the just above the 110.75 level. Interim support still safe down at the 38 pip retracement. And the major support at 108 at the 50% fib is still quite a ways away. Let's remove these now. So last week, the ECB did raise rates on the Thursday, but they were hoping for some news of a possible pause, but the ECB is still highlighting that inflation is still high and they will need to continue further rate hikes if necessary. And on Wednesday, they did take advantage of the Federal Reserve's announcement and attempted to test the resistance, but failed to break through. And then close on a Friday with a spinning top after the NFP news. So on the weekly time frame, it's now closed indecisively for another week with a doji. Previous week was spinning top, and it has been failing to break above the weekly 200 EMA, just below the 111 round figure. So we'll see if there's further consolidation next week, and whether it's going to break out above the 111, or whether it's going to break down from this trend line past the 21 pip, and finally retracing further back to the 38 pip retracement, where there should be some strong support. But at the moment, it's taking its time, and we'll see if there's any trigger from the US CPI figure next Wednesday. So let's see if this correlates inversely with the US dollar index as well, the DXY. Here's the US dollar index, the DXY. And it has tested both the upper trend line and the lower trend line for the week. It started off strong for the week with a slight gap up and attempted to test the 102 round figure, but then closed below this previous swing high here, and then fell through the FOMC rate decision and fell back, but found support, still found support at this lower trend line and attempted to recover, but still a weak close on Friday after the NFP, just below the 101 round figure. So trend line is still providing support, but it's still looking a bit bearish. On a weekly time frame, it's a weekly close with a spinning top, but still hanging on just above the lower trend line here. And the interim resistance just above 102 at the 38 fib is still strong, still a significant distance away. But we'll see if next week's trigger will either boost the US dollar or make it even weaker. Okay, so after the FOMC meeting, now the focus will move back to inflation. And we'll see whether this support is going to hold. If not, there could be a test of the swing low at 136. But at the moment, it's having difficulty to climb up towards the 102 round figure area, where the daily 55 is dropping in as well, dropping down lower. Okay, so still consolidating, but with a key support level which needs to hold, and it needs to hold next week. Otherwise, it's going to turn bearish for another week or another 2 weeks if the support breaks. All right, let's move back to the other major pairs. Let's also update the fib on the euro to move to this swing high of the previous week, and the 38 fib will be shifted up slightly, which will coincide with the rising 55 EMA, and resistance will move up to this swing high close to the 111. 50 fib is also next to the 108. So let's move on to the cable, where this week it's the Bank of England's turn. And it did take advantage from last week's FOMC rate decision, climb up to close above the swing high, and then continued to close higher after the non-farm payroll report on Friday. So let's see if it's going to test this previous swing low here from this previous swing low area. Let's climb up to the 126.74 area. Okay, and this lower trend line is still holding at the 786 retracement area now. And below that, strong support was going to come up at the 62 fib, which is actually the 38 fib retracement if it pulls back lower. And for the week, it did close strong with a strong push up and inching closer to the next resistance zone. After that, the next key one with the 138 fib extension aligns close to the weekly 200 EMA, just above 128. But I think we'll see some resistance coming up at this previous swing low area with this previous swing high as well on a weekly time frame. So that's going to cause some resistance. Okay, then also on Friday, there's also the UK GDP figure, which yeah, they're hoping that it doesn't drop into negative territory. It's still staying flat at the 0% growth. Well, if let's see, if we move to this reversal fib area, the 138 fib, it comes down a bit lower, just below 127. So that's possible resistance zone between the swing low and the fib here. So that's possible as well. And we can move the support higher to the 124, and this interim support is going to be just at the swing high here and the trend line. So we could update this fib to this reversal. Okay, so let's move on to the Aussie dollar. Where the RBA unexpectedly surprised the market and gave it a boost on Tuesday with the increase in the rates Tuesday, and it did test the daily 55 EMA, spiked through the 67 round figure, consolidated for the next couple of weeks until Friday, where it took advantage of the weaker US dollar and blasted through the resistance, trying to target the next fib at the 38 fib, just below the 6800, where the daily 200 is as well. So it's definitely going to try to target that area. And on the weekly time frame, it is definitely a strong bullish engulfing candle and trying to target the 68 zone. So after dipping below this lower trend line, it has managed to recover from the 66 area. All right, so let's change this to 67 to interim support. and move this support up to 66. There's also additional support from this area where it bounced from. Okay, so let's see whether there's any impact from the US CPI data. But at the moment, looks like the Aussie dollar is going to target the resistance zone, and we'll see if it's able to break through even higher. There's already strong support from 67 and perhaps slightly below, but it should be able to recover from any retracements. Okay, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.